Let's bring in Michelle Seitz. She is Russell Investments Chairman and CEO, and she's been watching the markets, of course, but she's also been watching in terms of retirement flows and what has been happening with Americans looking to their financial futures. Russell, by the way, oversees about $300 billion in assets under management. Michelle, I know something that has been of concern and a focus for you is people looking to their financial futures. We have seen the savings rate really go up quite a bit over the past year because of stimulus and people putting some of that money away. Do you think that that is a healthy thing? Do you think that this period of time has actually helped people improve their savings habits to some extent?
Number one, thank you very much for having me. And the answer to that is, of course, savings increasing in the amount of liquidity that we've seen both from a fiscal standpoint as well as monetary standpoint has been necessary and critically important to keep people afloat through this enormously difficult time. But no one should be comforted by short-term swings in savings rates because of these unemployment checks as well as emergency income checks. And that's because it's only a Band-Aid to make sure that they get through a very difficult financial hardship period. Pre-pandemic, I think the number was a third of the population could not withstand a $400 disruption. And that's a pretty extreme number. And that was pre-pandemic. So while, if 1.9 trillion is indeed released, that equals approximately 42% of our GDP, which is an astounding number. So it's not at all surprising that the savings rate is ticking up. What we're most concerned about is making sure that we can still provide for people's financial security and financial resilience as we get through this pandemic and we live longer lives with more income disruptions along the way and workplace disruptions that will necessitate reskilling and making sure that people can make sure that they don't go broke before they die.
Right, definitely. This is of concern. You sort of had two buckets here. You have people who feel like they don't have enough money to put away for retirement. And then it seems like sort of anecdotally and increasingly when it comes to retail investors who have some extra cash, they're not necessarily putting it in a traditional retirement account. They're putting it in Bitcoin or they're putting it in GameStop or, they're putting it in some of these hot money areas. How concerning is that to you when you're thinking about and trying to focus on people's long-term financial stability?
Right. Well, I don't think we make it easy for people as an industry to pay attention to, what Stephen Covey famously called the big rocks. And that's because it's very hard to think long-term. It's hard to think about things conceptually 10, 20 years away. But we are sitting on a ticking time bomb. Demographics is the future that's already happened. And just looking at the world population, 2/3 of the world population will be over the age of 65 by 2050. And thankfully, because of science, and because of biologic breakthroughs, we are living longer lives. And so making sure that that we make it easy for people to know the math of how to provide for their own financial security. And there is public-private partnerships to make the biggest levers clear to people. I think that will bring it more into focus. So I'm all for democratization of access to both debt as well as access to the markets. But the sensationalistic day trading, short squeeze mentality makes for fun conversation. It doesn't make for secure financial resilience and long-term livelihood. So that's what concerns me the most is we get distracted by a shiny new object and short-term gains, but that won't take care of long-term financial security. So we need as an industry and through public policy to make sure that we're addressing those and helping people to help themselves.
Michelle, I know you're very passionate about financial literacy. It's a topic I'm really passionate about too. I would make the argument A lot of folks right now, they don't know what they're buying, whether it's a SPAC, it's Bitcoin, whether it was GameStop 2 weeks ago. What are you working on in terms of financial literacy and how that can be improved?
Well, my firm, Russell Investments, has been a huge advocate of financial literacy. We do it with our institutional clients. We manage some of the biggest pension plans around the world, as well as other DC plans. And education is critical. Getting in early, explaining these things. I have 5 children, so we've had plenty of conversation about their access to Robinhood and Reddit posts, et cetera. And so I think this is an enormous opportunity for us all. And I thank you for highlighting it in a very responsible way. It's an opportunity for us all to make sure that people understand what they're buying, what they're doing, and whether or not they're aiding their long-term financial resilience or they're destroying it. So emotion, both fear and greed, certainly is the greatest wealth destructor that is known. And our job is to make sure that we make it, again, not fun and games, but serious, that people worked hard to make this money. The governments are working hard to make sure that we get money in people's pockets and to fritter it away in things that people don't understand and is more speculative than responsible investing is not the right way for our industry or the media for that matter to behave. And so again, for people that know what they're doing and they do have money that they can lose, it's a free country and people should be willing to have access to that. But as you frame, not knowing, not understanding what they're buying is very dangerous. And that's where the role of big institutions like Russell Investments, advisors, really need to educate. And we also need to have an infrastructure of education to make sure that people, again, can help themselves in ways that are good for their long-term health and not destructive.
Michelle, just quickly, what kind of policy remedies do you think there should be as well? Not necessarily for this situation. I just mean for facilitating retirement savings in general. Have you had conversations with the incoming administration, and what kind of hopes do you have for the coming year in terms of policy?
We have had many discussions with both state and national policymakers about making defaults easy. Right. I mean, again, we have to make this really simple. Pay yourself first. Make sure that defaults, one of the biggest benefits that we've ever made as an industry to the individual market is to default into target date funds instead of defaulting into cash. So inertia is a powerful, powerful force. People have busy lives. This isn't their day job. And making it as easy as possible to access savings and retirement plans, to make it an auto default that they can choose to get out of, but making sure that they have access. Number one, over 40 million Americans don't have access to an easy plan. They have to go and enroll in a brokerage account. They have to open up retirement assets, just making it incredibly easy to default into auto enroll plans that auto enroll into balanced funds with all of the data points that we can possibly get about them in order to make sure that it's as tailored as possible is critically important, but also making sure that we have, again, access for gig workers, contract workers, to ensure that they have the same auto enroll capabilities and multi-employer plans and the like, I think is critically important. Many states are doing that, but as much as we can be in partnership privately and with public policymakers to make sure that we have these large auto defaults and auto access and then glide paths to the best allocation possible will be 9/10 of the battle.
Michelle, good to see you. Thank you so much for joining us today. Michelle Seitz is Russell Investments Chairman and CEO. Thanks again, Michelle. Be well.
Thank you very much for having me.